Hello, everybody. A very happy Independence Day to you from chartvideo.com. Let's begin with weekend review. And for disclaimer, please visit chartvideo.com/disclaimer. The week just ended by Nifty closed at 11,178. The last day of the week, Friday, saw a massive down day. The candles are here in front of you. Let us take one day at a time and go back some 8-10 trading days. Suppose a bull enters every day at closing price on Nifty from 4th of August. He buys at 11,095. He buys next day at 11,101. He buys again next day at 11,200 and he buys like that, say almost every day. On this particular day, there was nothing for the bull to worry. Thereafter, in this week too, first 2 days, there was nothing for him to worry. On 12th, I would say it this way, there was something to worry but not much. Same was there on 13th as well. But on Friday, the bulls will be fearful because in one single day, 6 trading days profit has been wiped out. What will he do? Well, he would like to watch out what happens on Monday. Will the low be violated or not? That is of paramount importance. If the low is violated, one can be sure that the bulls will throw in their towels and downtrend will set in. But if the low is not violated, will it move up? The previous week I had expected the gap area to be tested. Will it be tested if the low is not violated? Well, let us see one by one. The intermediate uptrend will be punctured if 10,891 is violated. In that scenario, we can head for around 3-4 weeks of downtrend. Till this does not take place, we should not assume. Well, fine. If it moves up from here on, then obviously the intermediate term trend may have a higher trigger. Coming to the moving averages, the 13-day SMA is exactly where Nifty had closed. The 30-day SMA is slightly lower at around 11,031. As of now, we can say, the Nifty is above both the averages. ADX for the last 10 odd trading days, as we had anticipated, is flat and is indicating a trading market. In RSI, as you might recollect, we had talked about this particular green upward sloping channel for the last 2 weeks. The RSI had broken below the channel, had moved to very near the equilibrium line and thereafter tested the channel again. It could not move within the channel. Again, it faltered and came down. However, as of now, the indicator is at a level of 57. Well, I would say it this way, still above the equilibrium line. The weekly RSI is also on a positive territory with values of 59 and is still to give any reversal signals. The 100-week SMA is around 11,000 odd. This is hourly chart of Nifty. Placed on it is the 14-period RSI. As you can see, a triangle was violated on the downside and the projection of it also appears to have met. The 13, 30 and the 50 SMA is at around 11,270, which might act as a major resistance for Nifty in coming days. In the hourly charts, with the same set of moving averages, what we find 50 SMA is at around 11,269, where we can get a resistance on the higher side. The 100 SMA is at around 11,200. So this particular level might be the first thing to look out for on Monday morning, whether we stay above 11,200 odd or not. If it doesn't, it will attempt the 200-day, and in the course of which the low might be violated. So, looking at the hourly charts, it is very clear that the first thing first, what we need to see in Nifty is it should remain above 11,200 to keep the trend intact, and the low of Friday should not be violated. In the hourly charts, the ADX has made continuous lower high lower low and is right now at around the levels of 15 before registering a level of 9. Previous week too, I had suggested that ADX perhaps might be making a divergence. From here on, if ADX starts moving up, which it appears has just begun but still too early to say, it needs to cross the 1820 odd levels, and thereafter, whichever dominant DI takes it up, the direction of the market will be in the direction of dominant DI. Coming to the open interest interpretation, well, I would say it this way: previous week did not have any sizable increase in open interest. Even the day in which we had a 122 point sell-off, open interest decreased by 0.7%. So in a way we can say it that the fall as of now, the things may change in coming days, but the fall as of now has not been supported with rise in open interest. The put call ratio, which is at 1.31 currently, well, the chart shows somewhere the buoyancy might be under doubt. Last week it had ended the week at 1.6. Thereafter it's finding itself tough to remain above. This might be a warning sign. Coming to the conclusion in Nifty, well, there are two major takeaways which I would like to share with you. On the downside, the low of Friday should not be violated. Based on hourly chart, 11,200 needs to be climbed immediately. Based on weekly chart, the 100-week SMA, which is at around the 11,000 mark, should act as a major support. Before coming into any solid conclusion, I would like to have a detailed look at Bank Nifty. This is daily chart of Bank Nifty on which the major moving averages have been plotted. Along with it, the RSI has also been plotted. What I noticed was this particular trend line. It has been violated. It tested. Pullback was there. Thereafter, right now, it is moving down. Let's see the projection. If we drop a perpendicular line from the topmost of the point in RSI onto the trend line was violated here. Projection comes at around the 30 level. This is by any means a bad signal. If Bank Nifty moves down, it's very unlikely Nifty will stay higher up. So, in short, I would say if market moves up 11,200 and 11,270 on Nifty are the levels which I'll be closely looking out for. But if market moves down as the RSI indicator is suggesting in Bank Nifty, we can head in a major way on the downside, where the first support level comes at 21,000 in Bank Nifty and thereafter in the form of 100-day moving average at 20,500. Well, if you want to study deep into RSI, we have a course on RSI which has been uploaded for instant access at chartvideo.com. So much so for this week. Let's see what comes up.